In the 12 months to June 2023, Auckland's population exploded by 47,000 people. But here's the shocking part. Only 15,263 new homes were built. That left a shortfall of 404 homes for the year. And if you think that's just an Auckland problem, you need to hear this. Immigration-driven population growth is now starting to exceed the supply of new housing across New Zealand's major cities. After years of oversupply during COVID when borders were closed, we've hit a turning point. The housing market that gave us breathing room from 2018 to 2022, that's gone. Now here's why this matters to you right now. Over the 4 years from June 2018 to June 2022, Auckland built an extra 35,000 homes beyond what population growth required. 35,000 surplus homes. But in just 12 months, from June 2022 to June 2023, immigration surged back and wiped out that entire cushion. Work visa arrivals exploded from just a few hundred per month in early 2022 to nearly 20,000 in September 2023. Meanwhile, residential construction in Auckland has peaked and is expected to steadily decline over the next couple of years, so we're facing a perfect storm. Soaring immigration demand colliding with falling housing supply. And it's not just affecting house prices. Rental markets are buckling under the pressure. Infrastructure is straining. And if you're a renter, a first home buyer, or you're relying on public services like health and education, you're about to feel this impact directly. According to research spanning decades, immigration has been the biggest single driver of New Zealand's population growth. In the year to June 2020, right before COVID really hit, immigration accounted for 75.6% of population growth. Non-New Zealand citizens migrating here permanently. The numbers are stark. Of the 105,000 population increase that year, only 25,600 came from natural increase, births exceeding deaths. The remaining 79,400, international migration. And when you break that down, roughly 77% were foreign citizens, not returning Kiwis. That means around 61,000 foreign citizens migrated to New Zealand in that single year, accounting for 58% of total population growth. 58% from immigration alone. Fast forward to now, and those floodgates have reopened. The government responded to employer demands for overseas labour, and immigration is back with a vengeance. But here's the problem. We stopped building homes at the rate we need them. Welcome to Kiwi Property Reports. I'm bringing you urgent analysis of how mass immigration is slamming New Zealand's housing market and why the rental market is buckling under pressure that's only going to intensify. This isn't scaremongering. This is data-driven analysis from Statistics New Zealand, Auckland Council, research from Motu Economic and Public Policy Research, and the New Zealand Productivity Commission. What we're seeing is a fundamental mismatch between housing supply and immigration-driven demand. Today, we're going to unpack 3 critical elements. First, exactly how immigration drives population growth and housing demand, with specific numbers you need to know. Second, why the 4-year surplus of housing we built during COVID has already been consumed. And third, what this means for house prices, rents, infrastructure, and your investment or buying strategy going forward. Whether you're a landlord, a renter, a first home buyer, or a seasoned investor, understanding this trend is critical to your next move. Let's break it down. Let's start with a fundamental truth that many people don't fully grasp. Immigration is by far the biggest driver of New Zealand's population growth. And population growth drives housing demand. According to Statistics New Zealand, in the 12 months to June 2020, the population increased by 105,000. Of that, only 25,600 came from natural increase. The remaining 79,400 increase came from international migration. That's 75.6% of population growth from immigration. But here's where it gets more specific. Not all of those migrants were foreign citizens. Some were New Zealanders returning from overseas. According to Statistics NZ's migration data, in that year to June 2020, about 23% of net migration gains were New Zealand citizens, and 77% were citizens of other countries. Apply those ratios, and you get this breakdown. Returning New Zealanders, 18,262, 17.4% of population growth. Natural increase, 25,600, 24.4%. Overseas migrants, 61,138, 58.2%. So foreign citizens accounted for nearly 60% of population growth in that year, and every single one of them needs somewhere to live. Now, you might be thinking, okay, but that was 2020. What about the COVID years? Good question. From June 2018 to June 2021, immigration came to an almost complete standstill. Auckland's population increased by just 49,900 over those 3 years, an average of only 16,633 per year. To house that growth, Auckland would have needed about 16,663 new homes. But guess what was actually built? 34,554 homes, more than twice as many as required. That gave Auckland a surplus of 17,921 homes over those 3 years. Then, from June 2021 to June 2022, it got even more dramatic. Auckland's population actually declined by 12,400. Yes, declined. That meant a reduction in demand for 4,133 homes. But construction kept going, and 12,900 new homes were completed. So over 4 years, Auckland built a surplus of nearly 35,000 homes beyond what population growth required. But then, everything changed. The government reopened the immigration floodgates in response to employer calls for overseas labour. Work visa arrivals, which were just a few hundred per month until March 2022, started rising rapidly from April 2022. By September 2022, work visa arrivals passed 10,000 per month. By September 2023, just under 20,000 people arrived on work visas in a single month. And Auckland, as always, was the most popular destination. Meanwhile, residential construction in Auckland peaked and started its expected decline over the next couple of years. The building boom was over. So what happened in the 12 months to June 2023? Auckland's population increased by 47,000 people. At an average household occupancy of 3 people per dwelling, that required an additional 15,667 homes. But only 15,263 new homes were completed, leaving a shortfall of 404 homes for the year. Now, 404 homes might not sound like a lot, but it's significant because it represents a complete reversal of the trend. For 4 years, supply exceeded demand. Now demand exceeds supply, and this isn't just an Auckland story. Wellington, Christchurch, and Invercargill also saw outflows of people to other parts of the country that were greater than their natural population increase. That made them entirely dependent on international migration for population growth. Auckland's situation is particularly stark. According to Statistics NZ, the natural increase in Auckland's population was 12,800 in the year to June 2023. On top of that, there was a net gain of 36,700 people from overseas. That gave Auckland a total population gain of 37,000, with 99% coming from international migration. Applying the national ratio of 77% foreign citizens to international migrants, that suggests around 3/4, or 76.3%, of Auckland's population growth was attributable to foreign citizens migrating from overseas. Because Auckland is such a major destination for foreign migrants, the actual figure was likely even higher.
New Zealand's latest migration stats are out. In the year to April 2025, we as a country gained just 21,300 people. So who did we lose and who did we gain?
The good news story, there is a good news story, and that is that...
So here's the problem. We have immigration-driven demand surging back to pre-COVID levels and beyond, but housing supply is declining. According to Auckland Council figures, new dwelling completions in the 12 months to June 2023 fell just short of demand at 15,263. But residential construction is expected to steadily decline over the next couple of years. The construction sector is facing skill shortages. Material costs are rising. Funding, particularly public funding via local and central government, is constrained. And interest rate hikes have dampened both development feasibility and buyer demand, creating a feedback loop. The New Zealand Infrastructure Commission and Deloitte reported that despite construction activity representing 6.9% of GDP and 10% of total employment, the sector has serious challenges: skill shortages, low productivity, increasing costs, and funding constraints. Meanwhile, immigration continues to pour fuel on the demand fire. From April 2022 onward, work visa arrivals climbed steadily. In the year to June 2023, net migration was dominated by foreign citizens arriving on work and student visas. And remember, these aren't just workers filling gaps. They're people who need housing, transport, schools for their children, healthcare, and all the infrastructure that comes with a growing population. Statistics NZ reports that 30.5% of the net migration gain in the year to June 2020 was made up of people aged either under 18 or 60 and over. That means almost 1 in 3 migrants were in age groups with higher demands for services like education and health and were less likely to be working. The effect of high immigration isn't just felt in housing, it's felt across health, education, transport, water, sewerage, electricity, every piece of infrastructure that underpins a functioning society. Now let's talk about what this means for renters. Because while house prices get all the headlines, the rental market is where the pain is most acute right now. Research from Motu Economic and Public Policy Research spanning 1986 to 2013 found that population growth has consistently positive effects on house prices. The estimated elasticity of house prices with respect to population ranged from 0.4 to 0.65. That means a 10% increase in local area population is associated with a 4% to 6.5% increase in house prices on average. But here's the interesting part. Population size had no significant effect on rents in the levels regressions. However, population composition did. Specifically, areas with higher shares of new arrivals, new immigrants, returning New Zealanders, moving immigrants, and moving New Zealanders, saw positive effects on rents. Compared to the share of settled New Zealanders in an area, all other population groups positively affected rents. The effect was particularly strong for returning New Zealanders. What does this mean in practice? It means that when you have a surge of immigration, whether foreign citizens or returning Kiwis, rental markets feel immediate pressure. These are people who need housing right away, often before they can afford to buy. And with Auckland absorbing 99% of its population growth from international migration in the year to June 2023, rental demand in the city has skyrocketed. The Productivity Commission's research reinforces this. They note that rapidly rising house prices and rents reduce well-being through increased wealth inequality, overcrowding, homelessness, and acting as a barrier to people moving for better job opportunities. Home ownership rates in 2018 were around 70% for Pakeha, less than 50% for Maori, and less than 40% for Pacifica. With house prices surging and rental competition intensifying, those gaps are only widening. The Accommodation Supplement, government assistance for low-income renters and homeowners, tells the story. The number of people receiving it increased from 287,776 in June 2016 to 348,753 in June 2020. The annual fiscal cost rose from $1.19 billion in 2015 to 2016 to $1.97 billion in 2019 to 20. That's a 65% increase in cost in just 4 years. Why? Because rents kept climbing as housing supply struggled to keep pace with immigration-driven demand. But housing is only part of the story. Infrastructure, water, sewerage, transport, schools, hospitals is also straining under population pressure. The New Zealand Infrastructure Commission estimated the country's current infrastructure deficit at $104 billion. That's accumulated past underinvestment, plus the infrastructure needed for an additional 115,000 homes to eliminate current overcrowding. Looking ahead, they project this deficit will increase by a further $106 billion by 2051 if investments continue at current trends. Population and economic growth account for around 1/5 of future infrastructure demand. Now, 20% might not sound huge, but remember, infrastructure investment is lumpy and expensive. Roads, bridges, water systems, hospitals, schools, they're not easily scaled. You can't just add a bit more capacity each year, you build for decades ahead. And when population growth outpaces infrastructure investment, the quality of services declines, traffic congestion worsens, water quality issues emerge, hospital wait times lengthen, school class sizes grow. Meanwhile, immigration surges ahead, adding tens of thousands of people per year who all need housing, transport, healthcare, and education. The paradox is striking. the construction sector needs skilled workers to build housing and infrastructure. Many of those workers are migrants, but beyond a certain volume, new arrivals add more to demand than they do to supply in the short run. Research by Coleman and Carrigadickley found that each additional person requires on average $60,000 worth of new house construction, but that person's average productive potential, measured by GDP per head, was $54,178 in 2016. So in the short term, the demand effects of migrants exceed their supply effects. They need housing, schools, hospitals and roads before they've contributed enough economically to pay for them. Over time, migrants contribute. But repeated waves of high immigration create persistent imbalances. Resources shift from tradable sectors, exports, to non-tradable sectors like construction and services. Interest rates and exchange rates rise to maintain economic balance. And productivity growth in the tradable sector, where New Zealand's competitive advantage lies, suffers. So what does all this mean if you're a renter, a landlord, a first home buyer, or an investor? Let's break it down. For renters, the outlook is tough. With immigration surging and housing supply declining, rental competition is intensifying. Expect rents to continue rising, particularly in Auckland and other major centres where immigrants concentrate. Research shows that areas with higher shares of new arrivals experience upward pressure on rents. And with 99% of Auckland's population growth now coming from international migration, that pressure is only mounting. Your best strategy? Lock in longer tenancies if you can. Build a strong relationship with your landlord. And if you're considering buying, the window may be narrowing as demand starts to exceed supply again. For landlords, this is a landlord's market again. With immigration-driven demand returning and supply constrained, rental yields are improving, vacancy rates are falling, and you have more negotiating power. But don't get complacent. The Productivity Commission's research shows that immigration's positive effects on rents are strongest when there are high shares of new arrivals. If immigration policy shifts, or if another external shock hits, demand could soften quickly. Also, be aware of the broader political and social pressures. High immigration, rising rents, and housing unaffordability create resentment. Policy changes, rent controls, stricter regulations, higher taxes on landlords, become more likely when housing stress intensifies. For first home buyers, the math is getting harder again. Auckland built 35,000 surplus homes. Competition eased, prices stabilized or fell slightly in real terms. But that window is closing. With demand now exceeding supply, upward pressure on prices is returning. Yes, higher interest rates are dampening affordability, but if you're waiting for prices to fall significantly, you're betting against immigration-driven demand. The Productivity Commission's research found that a 10% increase in local population is associated with a 4% to 6.5% increase in house prices. Auckland's population is growing at around 2 to 3% per year from immigration alone. That's consistent upward pressure. Your strategy? If you're financially ready, act sooner rather than later. The combination of returning immigration and constrained supply creates a tightening market. Waiting for a perfect opportunity may mean missing the opportunity altogether. For investors, immigration-driven population growth is fundamentally positive for property investment. More people need more housing, but be strategic about location and property type. Auckland, Wellington, Christchurch and Invercargill are particularly dependent on international migration for population growth. These are the markets where demand pressures are strongest. But also consider the risks. Infrastructure deficits, political backlash against immigration, and potential policy shifts around foreign buyers or landlord regulations could all impact returns. The Productivity Commission warns that high immigration rates can tilt the economy away from exports toward non-tradable sectors like construction. If that creates macroeconomic imbalances, interest rates and exchange rates could rise, making debt servicing more expensive. Let's bring this all together. Immigration is the biggest driver of New Zealand's population growth, accounting for 75.6% of the increase in the year to June 2020. Foreign citizens made up 58% of total population growth that year. During COVID, borders closed and Auckland built a surplus of nearly 35,000 homes. But from June 2022 to June 2023, immigration surged back. Auckland's population grew by 47,000, requiring 15,667 new homes. Only 15,263 were built. That shortfall signals a turning point. After years of oversupply, demand is now exceeding supply. And with residential construction expected to decline and immigration continuing at high levels, that imbalance is set to worsen. Rental markets are buckling. Research shows that areas with high shares of new arrivals experience upward pressure on rents. With Auckland's population growth 99% from international migration, rental competition is intensifying. Infrastructure is straining. New Zealand faces a $104 billion current infrastructure deficit and a projected additional $106 billion shortfall by 2051. Population growth accounts for around 20% of that demand, but infrastructure investment hasn't kept pace. The impacts extend beyond housing. Health, education, transport, water, every public service is feeling the pressure of immigration-driven population growth. For renters, landlords, first home buyers, and investors, this changes the game. Demand pressures are back, supply is constrained, and the 4-year breathing room we had during COVID is gone. Mass immigration is slamming New Zealand's housing market. The rental market is buckling, and if you're navigating this market, whether buying, renting, investing, or selling, understanding these dynamics is critical. The era of surplus housing is over. We're back to immigration-driven demand exceeding supply. And until construction ramps up again, or immigration moderates, pressure on house prices, rents, and infrastructure will only intensify. If you found this analysis valuable, hit that like button and subscribe to Kiwi Property Reports for data-driven insights on New Zealand's property market. Drop a comment below. Are you feeling the pressure in your local rental or housing market? What's your strategy for navigating this shift? And remember, in property markets, timing isn't everything, but understanding the fundamental drivers of supply and demand is. Thanks for watching. I'll see you in the next report.